Yes. Did it work?
Yeah,
It
works.
Yes.
Okay, cool. Hey, Jason. Thanks for joining.
Hey, Don, how you doing? Good evening. I won't be able to be on long, but I got a few minutes.
All right.
Come by
cool.
and say hey. Get on the call.
Thank you. So Ken is gonna start with a little quote, and then we'll jump right in and introduce Alexis, and he's gonna share some great stuff with us tonight. So Ken.
Okay, got a quote here by Albert Einstein. Creativity is seeing what others see and thinking what no one else ever thought.
Want to show the picture?
I don't know how that presents here.
Oh, no, back up, back.
Yeah.
All right, you're on blur. Forget it. It's not working.
That's what I figured.
All right.
Next.
We tried. We're trying everything. Okay. All right. So let me introduce our very special guest for tonight. So Alexis is a seasoned business development professional, strategic entrepreneur, and investment expert with over 20 years of experience in building and managing successful enterprises across the retail, distribution, and real estate sectors. He is the founder and president of Megatech Distributor, LLC, a leading IT service provider and computer parts distributor, and he grew first-year sales over 300%, 375% growth over subsequent year, and he led the company to an 8-figure business valuation after just starting with $2,000. So that's pretty darn amazing. In the real estate industry, Alexis is a formidable player. He's the chief portfolio manager at AV Capital, where he's managed and developed a substantial rental portfolio of properties across the United States, including his own personal investments, those under his management, totaling a staggering $27 million worth of assets. His portfolio management expertise also extends to the world of finance, where he does stock trading and he manages index options, strategies, and future options commodities, where he focuses on S&P 500, Russell 2000, crude oil, gold, and silver. Adding to his list of accomplishments, he is president of the board of directors of the Family Coop Credit Union, where he presided over the board of the executive committee, and he ensured the strategic success of the organization. And he's also a proud alumni of Babson College. And for those who don't know Babson College, they were rated the #1 entrepreneurial college in the country. And Project 10K, I don't know if anybody knows that, but they were partners with Grant Cardone, is working with Babson College. And he also completed a prestigious 10K small business program by Goldman Sachs. And if that isn't enough, he has a commitment to continuous learning, and he's garnered numerous certifications from esteemed institutes worldwide, including Goldman Sachs, the Trading Foundation, certifications in understanding the Federal Reserve from the New York Institute of Finance. And his mission is to leverage his wealth and experience and knowledge to create strategic alliances, develop companies, and manage trade portfolios. He's also bilingual in Spanish and English. And if that's not enough, he's the co-host of a Spanish real estate investors group. So please help me welcome Alexis Jimenez.
Wow, thank you so much. Thank you for having me. What an honor.
I forgot to mention, the topic we're talking about is creative finance.
Which I love this topic because it's totally different, right? It's something that not everybody is accustomed to. And I'm ready.
Okay. So I'll give you free reign to get started. And are you okay if we ask questions along the way, or?
Yeah, absolutely. So let me I prepare actually a PowerPoint. So let me
Nice.
share my screen. And can I share my screen, right? I guess. Yeah, perfect.
We have to make you co-host, or couldn't you have access?
I do. Let me
I'll make you a co-host anyway.
all right. Can you see my screen?
Yes.
Sir.
Perfect. All right. So I wanted to start talking about myself, but I think that you did a great introduction.
Thank you.
So yeah, so but definitely this is me. You know, I've been developing business since 20 years ago, and I started, you know, with my business, Megatech Distributor, you know, and that business. When I started the business, I started that business only with $2,000 in capital, and the business today is worth 8 figures. It's an IT company. You know, I do business with 500 Fortune companies, the federal government, and in, you know, private companies as well around the world in 27 countries. Also, I have created other type of businesses in my professional career. And as you mentioned, at some point, I was the president of the board of director of a credit union. And real estate related, you know, I have done not some, but a couple of fix and flips, and also multifamily. I think that I started like most people start, you know, in multifamily, because when I started, I was buying multifamily by myself, but at some point you feel like, oh, this is how I feel. I at some point I feel that I was stuck. So it wasn't scalable. So I needed to scale my business somehow. And that's when I started to join syndication business model. And also I started to do creative finance. When you do creative finance, not necessarily you relied on your own capital. And that's one of the things that I'm going to talk about today. As you mentioned, my business was sponsored by Goldman Sachs, and I did a business degree in Boston College. And this is very important for me because at some point, this helped a lot my business, but also my professional career, my investment career, because I started to see the business in a different way. I was working in my business and not on the business. And now after that, I learned how to work on the business. And that the same thing that happened in real estate. Most of the time, we are working in the business and not on the business. And on top of that, I received one day an important email for me, and it was when COVID hit. At the time, Donald Trump, it was the president of the United States. But because of the relationship that I had with Goldman Sachs, or because of the sponsorship, and they were trying to close the gap between the small businesses and the government, I and you know, another group of investors, we received this email that the president of the United States, you know, he wanted to hear us on how can the government can help us to go through the COVID situation. So, but let's talk about the concepts that I was invited for, right? So, creative finance. I love this topic. Creative finance, it has like different subtopics, and the first of them is seller finance. It's, you know, seller finance is very simple to explain. The other one is subject to, I'm gonna go over it later, and then hybrid. And there's other concepts as well, but I'm gonna talk today only about seller finance, subject to, and hybrid. So in mortgage terms, a seller finance refers to a situation where the seller of a property, not the bank, the seller, directly finances the buyer's purchase instead of the buyer obtaining financing through the traditional lender, such as a bank or a credit union, right? and then I'm going to explain some details about it. A subject to refers to a situation in which the buyer of a property acquires the property. That means that we transfer the deed. If I'm the buyer, I'm transferring the deed from the seller's name into my name, but I'm taking over the existing mortgage payment. And I have received some questions about it, like, this is an assumable loan? And it's not. It's a totally different strategy. It's similar, but in an assumable loan, I need to qualify for it. In an existing in a subject to transaction, I'm taking over the existing mortgage that is in the seller's name. So that means that the buyer will acquire the property and the buyer will assume full responsibility for paying that mortgage. That's subject to. I'm going to give an example here. So everybody here goes to grocery, right? When you're going to grocery, most of the time, and I'm pretty sure that more than 99% of the people here or the transactions that you guys do are with credit card, right? But let me ask you a question. So you buy the grocery, but who owns that grocery? Visa owns it or you own it? We own it, right? Because we bought it, right? But now we have a debt towards Visa, right? So what's the evidence? If a police or an officer stopped me, and asked me how, to prove him that I'm the owner, what I got to prove him is the receipt, right? In a real estate transaction, the receipt is a deed. We call it the deed, right? So, and this is very important because this is happening every day. And unfortunately, real estate related, we don't have the same mindset. We live in a culture or in a society or whatever we want to call it, that the only way that we can think of to buy a property is either cash or getting a mortgage from a loan from a bank, right? But when I go to the grocery store, I buy the grocery with Visa or Mastercard or American Express. When I pay the gasoline the same way. When I'm going, I was 1 hour ago in Menards and I pay with my credit card. So they gave me a receipt, and at the end of the exit, actually, if you go to Costco, what happened at the end in the exit? They ask you for the receipt, right? So that's the deed. But you pay with credit card. So you owe that to the credit card company or the bank here. So in a real estate transaction, there's two transactions that happen. One is the deed and the other one is the mortgage. Those are totally two different transactions and they are separate. That means that you transfer the deed from the seller's name into your name, and the traditional way says that you go to the bank and you get a loan, and now you have to pay the mortgage payment to the lender, right? But it doesn't have to be that way. We can do the same thing here. So we had a property, right? That in the example before is the grocery, right? So we pay, in this case, with the mortgage, that in the example before is the Visa or the credit card, and we have the deed. The deed is the title, but both are two different transactions. Hopefully that makes sense. And people ask me, so why will a seller do a seller finance transaction? And there's a lot of reasons why. And actually, there's more benefits to the seller to do a seller transaction than actually to the buyer. I mean, there's benefits for both, but what people don't think about it is that, people says, no, I want cash. I want, you have to go to the bank and get a loan because the bank is going to pay me. And I'm going to get the whole price, right? Or the whole amount in cash. But that's not necessarily what happened. And we're going to go over in some examples that I'm going to explain. So the benefits for the seller is that the seller will obtain a potential higher price. There's no need to deal with tenants or negative situations. And in that case, the seller, we upgrade the seller or the landlord in this case to be a lender. And basically he's getting passive income as well, but without dealing with tenants and toilets. There's no need for an appraisal or evaluation. I mean, you can request it, but there's no need for that because the bank always require that. But in a seller finance transaction, not necessarily you need, I mean, it's a common agreement, right? If you guys don't require that, you don't necessarily need an appraisal or evaluation. So again, you generate or the seller gets monthly passive income without being a landlord. And if you guys become in agreement to or the seller charge interest on that loan, he will get a second source of income that is the interest on the loan. And less expensive, the closing costs are less expensive than in a traditional transaction. And if needed, the seller in the future can sell a portion or the full loan on the secondary market. That means, okay, the seller says, okay, no problem. Let's do a seller finance transaction today because whatever the reason is. And then in 2 years, the seller has a new project, or maybe he needs to pay some debts off, or whatever the reason is, and he needs the cash now. So now he can go to the secondary market and sell that note because the loan is considered an asset. It's something that you can sell in the secondary market. This is very important for me, and this is a good point for, or a great benefit, actually, I will say, for the seller. The seller not necessarily needs to pay capital gains to the government. And, you know, it's very important that this is something that needs to be consulted with an attorney or a CPA. And I have a link here that probably I can drop off in the chat later. And you can read an article where the IRS explained how you can defer the taxes on a seller transaction. And actually, the higher the transaction is, the higher the seller is motivated to do a seller finance transaction, especially to not paying taxes or paying a loan amount or defer the amount of taxes that the seller needs to pay. In the event of default, the seller get back foreclose on the buyer, right? And he keep all the money invested or paid by the buyer, including the deposits, monthly payment, improvements, and so on. So what's the benefits? And actually I have a mistake here, but what's the benefits for, I know it's all right. What's the benefits for the buyer on a seller transaction? So as a buyer, we can get a better interest rate on the loan. So right now, this is the perfect environment to do this type of transactions. Because right now, if you guys notice, a year ago, someone was putting the property on the market, and then a couple of days later, the property was sold. Now is not necessarily happening that. So houses are taking maybe 1-2 months, sometimes 3 months to sell, and the sellers are getting desperate. So this is the perfect environment to do this type of transactions. And as a buyer, I can get a better interest rate on the loan. I have closed actually deals at 0% seller finance, and that's something that it could happen. The loan does not appear on your credit report, allowing you to have freedom, and you can still buying other type of or getting other type of loans like car loans, personal loans, and so on. The closing costs are less expensive, and so let's now talk about what are the benefits on a subject to transaction for the seller. So again, a potential to obtain a higher price on the selling price. The buyer assumes the responsibility for the mortgage note. The closing costs are less expensive. And the same thing, in the event of the default, the seller can foreclose on the buyer, and basically the seller keeps the deposit, the monthly payment, and all the improvement that the buyer has done to the property. Okay. This is very interesting because I'm gonna share this with you guys. This is a hot settlement, and these are concepts that we don't hear often, but this is something that has been here for years. If I zoom in this hot settlement and I scroll down to the clause 203, it says existing loans taking subject to. So that means in a seller in this type of transaction, let's say that you're buying the property for $300,000 and he owes to the mortgage 200. We're gonna add the $200,000 here. So this is supported by HUD, the government. What are the benefits to the buyer subject to transaction? A potential to obtain a better interest rate. And so everybody knows that now the interest rate to get, let's go simple, a single family home, maybe at 6.5%, 7% maybe. So what happened 1 or 2 years ago? People were getting loans at 2%, 3%, 4%. So now is the perfect time to take over those mortgage loans and get a 2%, 3% subject to. So for me, right in this environment, yes, we want to buy houses or want to buy real estate, but my mindset changed a little bit. Yes, I'm buying the property, but I'm buying also a note with an interest rate that doesn't exist anymore. And this is beautiful right now. So again, the loan does not appear on your credit report, allowing you the freedom to do more transactions. The closing costs are less expensive, and so on. So let's go over. This is a real case. This is a single family home. The ARV at the time after repair value was $150,000. The seller wanted $175,000, which it never makes sense to me, especially when the market, it was a bullish market. I think that, but his mindset was way higher. The price was way higher. Anyway, so he wanted $175,000. So before I offered him the $185,000, we started a back and forth. Hey, Mr. Seller, why you want $175,000 when the ARV is $150,000? Yeah, and he was kind of attached emotional to the house. And most of the time when we do this type of transaction, you need to know why the seller wants to sell the property. This guy, in this case, he was getting older. He said that he was tired of being a landlord, and I asked him, do you have a mortgage? He said, I don't have a mortgage. Okay, so wait a second. The ARV right now is $150,000. You're asking me for $175,000. The only way that I can make this happen is to a seller finance transaction. I will give you not $175,000. I'll give you $185,000. But it has to be at 0% interest rate. He accepted it. Why? Because I was building the interest rate on the price. And this is very interesting because if you guys take a mortgage calculator, and maybe we can do an exercise real quick here. Actually, let's do it here. Mortgage calculator. I don't like
That's
being
interesting that you built the mortgage interest rate right into the price, so you were able to offer him higher payment.
Exactly. I did that, but also I saved money. So can you guys see the mortgage calculator here?
Yes.
Okay, perfect. So let's say that the ARV was 150. So any other person will buy for 150, no more than that, right? So let's maybe less than that, but let's do 150. So 150 at the time, the interest rate was maybe around 4%, let's say, to be conservative. So, and actually, this is not the real price, because if I go to the bank and I ask for 150, they will say, okay, I'll give you 80%, right? So the loan could be maybe around 120, let's say 120. So first of all, I needed to bring to the table $30,000 plus closing costs, right? So then if we take the 573 mortgage payment and we multiply that times 360, 30 years, my total payment on that property was 206 plus the $30,000 that I did on deposit at the beginning. Basically, my total purchase price would be 236. So I sold to the seller the idea to do a seller transaction to build the interest rate upfront on the price. That way, if we subtract 236 by the price that I was willing to pay, or I pay for it, I saved $51,000, and the seller was happy.
Can you
And
do me a favor and go back? How did you get from the monthly payment to the 236?
so basically, let's. You guys see the calculator here? This one?
Yes.
Oops, I'm sorry. Let me go back. Okay, so on a regular transaction, usually the bank asks for 20% down payment, right?
So 120.
Exactly. So 120, the loan will be 120. That's what I got here, right? 120 at a 30-year fixed note at 4%. That was a couple of years ago. The mortgage payment is 573. So if we multiply 173 times 360, that is 30 years, or 360 months, in other words, right? It's 206 plus $30,000 that I paid as a down payment. That's my total purchase price, right? Because
Gotcha.
the bank is involved. So in this transaction, the seller got $35,000 more of the ARV, actually $10,000 more of his asking price, that it was 175, and I saved $51,000 because we did this type of transaction.
That's pretty cool.
And actually, in a traditional transaction, I'll need it to make a 20%. In this case, it was $30,000 down payment. In this case, we agreed to do only $5,000 down payment. And actually, I never approached to him that. He approached that to me. Give me just $5,000 and let's do the transaction. So I was like, okay, $5,000 is nothing. The bank will ask me 20%, that it was $30,000. In this particular case, he wanted the payments 2,500 times 60, and then a balloon payment at year 5 at 30,000. No interest rate. So this is another example, and this deal is still in negotiation. I'm trying to take over a resort in Michigan. The seller wants $3 million. He has a current a mortgage right now. He owes $400,000. So I'm offering him, as subject to transaction, take over the mortgage payment. And this transaction, I love this transaction. You guys will be excited. So I offer him, and I have some words in Spanish because I did this presentation first in Spanish and then I translated it. But anyway, you guys got it. I offer him the $3 million plus closing costs. This is the added value. So basically, the seller is getting full price while everybody was lowballing him, he was receiving offers at 2.5, 2.3. So I said, hey, let's do something. I'll give you full price, 3 million. And on top of that, I'll pay all the closing costs, but it has to be on my terms, right? So I offered him $3 million plus closing costs, 30 years amortization at 2.5 interest rate, 0 down payment, and the mortgage note is $10,000. And he wants actually, because we haven't closed yet, he wants a 10-year balloon, which is okay for me, because in 10 years, we can expect maybe a better interest rate with the traditional bank if I need to do a refi. So basically, the balloon payment in 10 years, it'll be close to $2 million. What are the benefits for him? So I take over his mortgage payment. He get his full asking price while everybody was lowballing him. He doesn't pay closing costs. That if you do the math, in a $3 million transaction, closing costs is a lot of money. He get more income because now he's getting not only the full price, but also he's getting a 2.5 interest rate on the loan. So he's getting another source of income. He generate passive income as a lender and not as a landlord, and he can avoid capital gains legally in these type of transactions. So the same transaction, this is a comparison with the same transaction with a traditional bank. The seller wants 3 million. Okay, I offer him 3 million. This is the same thing, right? I offer him 3 million. He's generating an income, $1 million and interest. I'm sorry, $1 million extra. So basically, his total profit in this deal is the $3 million purchase price plus the interest rate or the interest that he got on the loan. Basically, his net income is $4 million and lower capital gain payments. So in a bank transaction, this is the same deal, the same seller, the same transaction, but in a traditional way. And I'm doing this on purpose because most of the time people ask me why a seller will do that. And this is the reason why. He was getting offers for 2.5 and less than that, 2.2, 2.3. So I took, the 2.5 that it was the higher price. On top of that, now he needs to pay capital gain over those 2.5. His closing cost, it'll be $150,000 extra. Then he needs to pay the broker's fee, $180,000 extra. So now he needs to pay also capital gain, $500,000. So at the end, his net income is 1.6. So when you sit down with the seller and the seller is arguing, hey, I want full cash, and you sit down and you explain this to the seller, no problem, I can go to the bank. The numbers make sense, I can go to the bank. But the reason why I'm pitching you the seller or the creative finance transaction is because this is a benefit for you, Mr. Seller, not necessarily for me. I mean, I have some benefits as a buyer, but you as a seller have more benefits. And in this transaction, you can get a $4 million along the way, or you can get a bunch of cash now, but it's not going to be full. You're going to get only 1.6 because you need to pay closing costs, the broker's fee, capital gain, and so on. And on top of that, a deal like this one could take between 45 to 90 days, while a seller transaction, you can do it at the same day. You just need an attorney, a title company, and in 24 hours, you do the transaction. You transfer the deed over, and we do the subject to, if there's a subject to mortgage on it.
So at what point would the seller have to pay the taxes?
I'm sorry, what was that again?
At what point will a seller and seller financing have to pay taxes?
Okay, that's a great question. And I'm going to answer that question with another transaction that because actually I'm doing another one that I sat down with the seller last week, and he asked me the same question. He's selling another deal. This is a hotel a small boutique hotel that I'm trying to buy for 1.8. The guy wants to retire, and that's the only reason. He doesn't have any other ventures, business ventures, or journey, or any other type of reason why I should get all the money up front. So I told him, okay, so no problem. I can go to the bank. I'll give you 1.8. Actually, I'm not going to give you 1.8 because that's your asking price. If I have to pay full, I'll give you 1.6, 1.5. So I asked him, so what's the price that you bought this property for? He said, I bought it for 700. Okay, no problem. So in the conversation, I asked him, how much do you want as a down payment? And think about this, you're going to retire. Maybe you want some cash to buy another property and, or travel the world. I don't know. So he said, I think that I will be comfortable with $600,000. And then the difference, we can do a seller finance note. Okay, perfect. So because he bought the property at 700 and now I'm giving him 600, he doesn't have to pay capital gains because you don't pay even that he's selling the property at 1.8 million. You don't pay taxes or capital gain taxes on something that you haven't received yet. Does that make sense? Once the profit it's more than 700, the profit that he's getting is more than 700, that it was the original purchase price, is when you start to pay capital gains. But in that transaction, the mortgage note, it's $10,000. So let's say, and this is just for simplify the explanation. Let's say that the $10,000 is it's the monthly payment, but in a year it's going to be $120,000. But let's say that it's full income. So now he's paying capital gain on the $120,000 and not the 1.8 because he hasn't received the 1.8 yet. Does that make sense?
Yep.
All right.
Yes, so
Yes.
if you
Uh-huh.
give him 600,000, then the first year, another 100,000, he doesn't have to pay taxes on only.
He
the
doesn't have
last
to pay
20.
tax. Exactly. Because he bought the property for 700. Now the third year, let's say now he's above, the transaction is above the 700. Now he's paying capital gain, but only on the portion that he's receiving in a yearly basis.
Okay.
So example number 2, this is another transaction. The seller wants 2.8. It's very similar. The seller wants a 2.8. He has a mortgage of $400,000 that I'm taking over the mortgage payment on a subject to transaction. I offered him 2.8 million plus the 50% of the closing costs. This is very interesting because when you go to the bank, you open the doors and enter to the bank and says, I want to buy this property and these are my terms. We don't do that. Who put the terms on the transaction is the bank, not us, right? But in a seller transaction, who put the terms on the transaction is you as a buyer and the seller as a seller, right? It's in common agreement. So in this case, we can be creative. And I was creative. I'll give you full price and I'll pay 50% of the closing costs. And the terms are going to be 30 years amortization note at 2.5 interest rate. But in this case, I'm giving you $200,000 as a down payment and a monthly payment of $8,693 for the next 10 years. So his benefits are I take over his mortgage payment. He get full price while everybody was lowballing him again. He doesn't have to cover all the closing costs, in this case 50%. He get another source of income, that is the interest rate again. And in this case, the same concept. Now he's getting passive income as a lender and not as a landlord. And the same concept, he can avoid capital gains legally.
Alex, I have a question for you.
Sure.
I thought when you transfer a property over, if it has a loan on it, there's a due on sale clause.
That's a great question. I love it. I have actually, if you allow me a couple of slides, I'm going to answer that question.
Okay.
Yeah. And so this one, this one is interesting, and to be very quick, because basically it's a similar transaction. When this is a multifamily deal, when I did the underwriting, his net OI, his net operating income right now, it's $11,000. So I structured the deal that I can pay the seller full price. I take over the mortgage payment. Actually, I'll give him, he wanted 2.7, and I'll give him or offer him 2.8. 0% down payment. But this is the thing. So when I structured the deal, and asking what's your actual NOI, he said, well, actually it's close to 11,000. So I was like, okay, so what's your next chapter in your life? And he said, no, I just want to travel the world and be retired and so on. Okay. And I was like, okay, so that means that you don't need all the money right now. So what if we structure the deal that I'll give you the same amount that you're getting right now, but instead of being a landlord, being a lender? And that was the key point, the trigger point to do the transaction, because basically he's getting the same amount of money, but without being a landlord in this case. So these are some common objections, and this is the sale clause that Kenneth asked me, and it has another name, the acceleration clause as well. And basically this is a contractual provision commonly found in loan agreements on mortgages that requires the borrower to pay the entire outstanding balance of the loan if the property securing the loan is sold or transferred to a new owner. In a simple word, we do a subject to transaction, right? I transfer the deed in my name, but the mortgage is still in Jim Smith's name, the seller, right? So the bank legally they have the legal right, but not the obligation to request full payment of the mortgage. And this is what the sale clause or the due on sale clause says. I've been doing creative financing just for I would say maybe 18 months, not too much. But I have heard about people that have been doing this for years. And I know a guy that he has done more than 3,000 transactions, and he has received only the due on sale clause 5 times, but none of them he needed to pay in full amount the mortgage. So what happened is that the bank calls and said, hey, Mr. Buyer, I noticed that you transfer, Mr. Seller transferred the deed in your name, but the mortgage is still in his name. Yeah, but I've been paying the mortgage for the last 24, 36 months on time. Yeah, that's right, no problem. And basically that's usually what happened. If the bank at the end, they have the legal right, not the obligation. That means if they force you, well, in that case, we will need to, go to the bank. It could be the same bank and qualify for a loan, and then they do a refi. This is not very common, but the answer is yes. This is something that exists, that could happen, but this is something that happened, once every, I don't want to say a number, but, based on the people that I've been learning this from, once every, 900 transactions, for example. So what happened if the seller asked me, so what happened if you don't pay the mortgage? It's still in my name. Even if it is a subject to, or if it is a seller finance, it could be the same situation, right? So my answer to the seller is, Mr. Seller, this is the best thing that could happen to you, because you can take over the deed back. You can foreclose on me. And actually, There is a transaction. I had a conversation with Don a couple of weeks ago about this, and not everybody knows about this, but this is very important. There is an addendum that we can add to the mortgage that it calls the transaction. I forgot the word. I'll give the word later. But anyway, it's basically what it does is if the buyer stop making payments, the seller can transfer the deed immediately without going foreclosure. Is the performance deed addendum? That was the word. The performance deed addendum. Basically, you attach that to the mortgage note, and in that case, I make the seller more comfortable to do the transaction. Because when they ask these type of questions, they have some concerns, and it's okay. I will have the same concern, but this is the way that I address that type of question. Hey, Mr. Seller, this is the first thing that could happen to you. You can either foreclose on me, or we can attach to the mortgage an addendum that calls its name is the performance deed. That basically you don't have to foreclose on me. If in 60 days I don't pay the mortgage, you can transfer the deed immediately without going foreclosure, and that makes the transaction smoothly.
Okay.
And this is the name. It was there. Another common objection or concern is, how do you ensure that I will receive the payments every month? So, Mr. Seller, I will make the payments. I'm going to hire a third-party company that basically is a servicing company that basically will withdraw the amount of my bank account every month. I will make the deposit every month. I'll pay the service. It's only $35 per month. It's not a big deal. I'll pay that, and they do everything. Maybe at the beginning, if you're doing 1 or 2 or 3 transactions, maybe makes more sense to make the payment by ourselves, right? But once you get to the point that you have so many properties, imagine, every month writing a check or maybe a wire or ACH payment. So it's easier to hire a servicing company. They do everything. And actually, this is what you guys see here. This is a real email that the seller received and the buyer received every month. So, and you see the breakdown. This is the payment amount, the interest rate, the principal, the other allocations. This is basically HOA or insurance or other type of third party that are involved in a regular real estate transaction. And at the end, you see the buyer and the seller see this, and it's a very transparent transaction.
Yeah, Alexis, could you just go back a second, please, and just zoom in on that a little bit? I'm not wearing my reading glasses, so. Yeah.
Oh, okay. So basically, here is the first row is the payment amount. In this case,
Okay.
it's a $3,899 payment, and then in the second column you see the year to date. So basically, this is the amount that you have paid or the seller have received year to date. Then the interest, this is a 0% interest transaction, so there's no interest rate here or no interest portion. The principal, it's this is the amount that is towards the principal. Other allocation is because most of the time, well, not most of the time, but sometimes there's other like insurance, HOA, what else? Taxes. So they allocate that. The borrower's fees, lender, and other type of transactions. And then at the end, you see the account balance is $341,916 before payment. Then after payment, $340,000, $416. And then you see the due date, it was 11/1st, and then the after payment is December 1st.
Thank you.
Absolutely. And that's it. Any question?
Yes, I have a question. So let's say you take over the property, but there's all kind of repairs that have to be made. So are you finding properties that need work, or what happens in the case of repairs?
Yeah, so I think that it's gonna depend on the underwriting, right? Not because the seller is willing to do a seller finance transaction or a subject to transaction, I will do the transaction. At the end, it has to make sense for me because I'm the buyer, right? And of course, it has to make sense for him, but for me, it has to be a win-win situation. There's no a win situation for me and a lose situation for him, or vice versa, right? So if the numbers make sense, and actually I'm trying to think, I have a deal that I did recently with a partner in Arkansas, and we purchased the property for 220. The property, well, we estimated 10,000. We are at 26. That happened always, right? It's a fix and flip. But the ARV came for 360. So we have a lot of room, to sell the property and still making profit. So because the underwriting made sense, we did the transaction. Does that answer your question?
So you're putting in the money for the repairs in that case?
Yes, in that case, most of the time, I mean, there's different type of sellers, but in this environment, foreclosures, probate, divorce, and actually people going to jail, these are nice, great transactions to take over because the person is already in pain. Actually, that one, it was a divorce. And they were trying to sell the property at full price. No one in this environment, no one's wanted to pay full price. Everybody were lowballing at 180, 170. And they wanted 220. So I offered him, I'll pay 220, but it has to be on my terms.
Okay.
Alex, question I have for you, that's pretty much relevant to the area where, are you looking in like areas that are distressed? Because I know where we live, I'm a realtor in Wayne, New Jersey, and houses here are still going some 40, 50, $60,000 over asking price. So
You're still
do
getting
you
bidding
see,
wars.
excuse me?
You're still getting seeing bidding
Oh, yeah,
war.
it's still crazy here, yeah. So do you pretty much look for areas? Of course, you wouldn't want to really go to a place where you're paying 40, 50, and 60,000 over asking price. You want to look for areas where I guess they're more distressed right now. Is that what your strategy is?
I mean, the answer is yes. You can still do this type of transactions in that type of market or environment, but sometimes it's going to be more difficult, right? Because
Yeah.
the seller, even if I offer him a higher price of what he's looking for, it's still difficult because, let's say that he's selling for 550. He knows that in a bidding war, if the market is still hot, he will
Yeah.
get 590, maybe 600. I don't know. So
Mhm.
it's very difficult to do it, this type of transaction. That doesn't mean that it's not possible. It's still possible because actually the resort that I'm trying to buy, and the guest house that I'm trying to buy in another market, I'm trying to buy a resort in Michigan, and the guest house is in Puerto Rico, and both markets are hot. Puerto Rico is crazy. There's so much bidding war and people buying cash all the time. Actually, the agent told me, I was last week down there, and the agent told me that in the last 6 months he has done more cash transactions that with mortgages. So the market is hot. But why the seller in this case is willing to do a seller transaction? because he doesn't have any other chapter or journey in his life. So he's asking for 1.8. Everybody's offer him 1.5, 1.6. And at the end, he has to pay the broker. He has to pay closing costs, capital gain. And at the end, he will get only $1 million. And that will make sense if you have another deal that you want to buy with those $1 million, right? But in his case, he wants to be retired. So I was like, why? First of all, you're gonna not lose, but all the payments that you're gonna needs to pay, you're gonna lose $800,000. So, and now you're gonna have in your bank sitting $1 million doing nothing. So what if we structure the deal? I'll give you a down payment, a decent down payment, so you can buy a house for your retirement purposes, and you can still have some cash to travel the world. And on top of that, I'm paying you, or you're getting a monthly payment on your inbox and your mailbox. I'm sorry. That way, you can still pay your lifestyle. And in that case, makes sense to him, even that the market is hot.
So it could be a great retirement strategy for a lot of these people.
Absolutely. Absolutely. And
So-
actually, now that you mentioned that, at some point, I received an offer someone from Silicon Valley to buy my business. And it was the first time that I put myself in a seller's position. And when I did the breakdown, after capital gain, broker's fee, and so on, I was like, this is not a deal for me. I will do, and I told him, I'm not going to continue with the transaction. I prefer, though, to do a seller finance. If someone is willing to do to give me a down payment and then make me make payment towards the loan every month, I prefer that. I'll get full price. I'm still young, I still get that down payment and buy another property or multifamily or whatever, and then I receive a passive income. So definitely, when you see that from the seller's perspective, all the benefits that the seller will receive, this is a no-brainer.
Now, how do you go about finding your properties?
Yeah, I was about to ask the same question.
So the question is if I need to make a down payment, for example?
No.
No.
Where do you, you're not going to look on the multiple listing service because most of those are already listed with the real estate company. So how do you go about finding your prospective sellers?
Okay, you can still go to the MLS, and I'll give you a strategy for that. So, but let me answer the question with two answers. So, I get data from the county directly, right? So when someone record a divorce or a foreclosure, most of the time, and that's depend on the county, right? But the counties that I'm in, most of the time I'm get the data a week later. So I'm the person, calling that seller that is already in distress. That doesn't mean that the seller will sell right away, because the foreclosure was recorded a week ago. That means that he only missed one payment, right? It's not until he received the letter from the lender that he has an auction date. Hey, Mr. Seller, you have 2 weeks to catch up with the payment, or you're going to lose your property on foreclosure. That's the point. That it depends on the city, right? Because there's some cities that take months. For example, I was doing a deal in Houston, and in Houston, they don't give a chance. It's right away. A month later, you got the letter and you go to court. And because I was on the phone with the seller trying to convince him, but he wasn't feeling the pain maybe at the beginning. But then when he received the notification from the bank, he was like, hey, Alexis, you know what? I get the notification. I have 2 weeks. I don't have the money to catch up with the payment. Are you still on with the deal? And I was like, yeah, let's do the deal. So that's without going to the MLS. On the MLS, though, what happened, and this is happening a lot in this environment, what happened with those deals that got expired? So after 6 months, I called the seller. Hey, Mr. Seller, I noticed that you tried to sell your property with an agent, and for some reason you guys couldn't sell the property. Yeah, I received a lot of offers, but you know what? I couldn't sell. Well, I'm willing to pay, what's the price that you're looking for? I'm looking for 200. And this is an example. We have to go through the numbers and do a small underwriting, right? A napkin underwriting. But let's say for the sake of the sample, hey, Mr. Selly, how much are you looking for? I'm looking for 200. Okay, I'll give you 210, but it has to be on my terms. And it's a good approach because the seller tried to sell the property for 200 for the last 6 months, while everybody was lowballing him 150, 160, 180, and then suddenly the listing expired, and this guy came from nowhere and offered him $10,000 more of what he was looking for. And most of the time, he said, "Yeah, let's do it."
All right.
So when you talk about it has to be on my terms, are those words you actually say to a seller?
Straightforward, directly. Because I'm paying more of what you're looking for. That's the first sentence, right? So, Mr. Seller, I'm willing to pay more of what you're looking for, but it has to be on my terms.
Yeah,
So
'cause
if he's
otherwise
selling,
you don't want to waste his time or your time.
yeah, and on top of that, let's say that he's trying to sell for 500. So, Mr. Seller, I'll give you 450 like everybody else is doing, offering you for 450. And then I'll go to the bank. Or I'll give you 510, 520, $10,000 or $20,000 extra, but I don't want to go to the bank. It has to be between you and me.
So
Okay.
you kind of give them a choice. I can either do this through the bank or we can do this outside the bank. And here's your benefits.
And that happened when there's no pain, right? Because if the person is going through a foreclosure, he doesn't have any option. You have full control of the transaction. He either goes to foreclosure, lose the property, lose the credit, lose everything, or he's saved. His credit report and someone else save him, from going through that difficult situation. So in that type of transactions, basically you have full control. And most of the time in a divorce as well, and if the person goes to jail as well, now he's in jail. He doesn't have any other option. And there's a couple of transactions that we have full control, but like, for example, the guy that he wants to retire, he doesn't have any pain. I'm just trying to structure the deal somehow that makes sense to him because he wants to retire, and it makes sense to me on a seller transaction.
So how do you even find people who went to jail? Like, how can you even negotiate with them if they're in jail?
I haven't done it, to be honest, but
Oh,
2 weeks ago, I took a webinar that this lady, she lives in Columbus, actually, she's doing it. And basically she's buying this list from companies that they do this, like they do basically they clean up data. They are like calling the county all the time, and they make sure that the probate, the foreclosure, the person goes to jail. I'm not sure to be 100% how they get the data from, because foreclosure is recorded, right, and probate and divorce, but I'm not sure about going to jail. But they're getting the data, and she's closing a lot of deals. That that's something fresh, to be honest. It's something that I would like to experience, because if you put yourself on the other side, I guess that it's going to be an easy transaction, right? So the person who goes to jail, now what? It's someone else is taking over the mortgage payment. I think that it's good for that person, right? And for us, as a buyer.
They don't lose everything. That's right.
Yeah.
Alexis.
Interesting.
Yeah.
Yeah. Who else has
Hi, how
has
you doing?
questions?
I have a question. If the seller wants to buy another house, like is the first house the deal is doing with you. It is that reported on the credit, right? So if they want to get another house, they had to put like a 20% down if they want to buy another house.
I love that question. So, the mortgage is still in the seller's name, right? Now the seller wants to buy another property. So for that happen, it has to happen 12 months later. And this is very important that, when we do this type of transaction, subject to no seller finance, right? A subject to transaction, we have to be clear and transparent with the seller. So Mr. Seller, and again, that depends on the bank, but as a rule of thumb, or most of the banks, they ask or require, or they want to see that someone else is making the mortgage payment, and then after 12 months they subtract that from your credit report and they can approve a new loan for you. And this is very similar. I'm pretty sure that you guys have heard about this before. This is pretty similar to when maybe you are a landlord and you have a tenant that he wants to buy the house from you, but he doesn't have a credit, and then you guys become or put in place a lease option agreement, right? So now the tenant is paying that lease option, and then after 12 months we can go to the mortgage bank and he said, and we can approach the bank and says, hey bank, Mr. Tenant or Mr. Buyer, he's been, these are the proof that he's been paying the lease option for 12 months, and now it's easier for the bank approve that loan. Hopefully that answered the question.
So when you buy these houses, is the seller looking to stay in the house sometimes?
It hasn't happened to me personally, but I have heard to other people that I know that the seller, the seller asked him to stay in the house as a tenant. It's dangerous. The reason why is because the person is still emotional attached to the property, and I have heard that they start like, hey, this is my property, I own it, I'm paying the mortgage. Well, at the end, technically speaking, they're not paying any mortgage, they're paying a rental contract, like as a tenant, right? But because they're still emotional attached to the property, we can as a new buyer, we can face some emotional challenges with the seller, now new tenant, and I don't recommend it. As I mentioned, I personally haven't gone through that, but I have heard that a couple of times from other people that have done it, so I prefer to stay away.
Okay, so then what in your negotiation do you say to them that says, once I take over this house, you're leaving?
So I
And
ask him,
that's
so let's say the person is going to foreclosure, right? So
Mhm.
Mr. Seller, so I'm gonna save you on this foreclosure situation. So what's your next chapter? Well, I need to rent a property because I need a roof to live. Okay, so do you have money for that? No. And again, this is based on the underwriting. If the numbers make sense, I'll say, Mr. Seller, what if I give you $5,000 extra and I put money on your pocket? Now I'm saving your foreclosure situation, saving your credit report, and on top of that, I'm giving you $5,000 in your pocket so you can find a place to live. So there's a transaction that I was trying to do recently. It fell through because the seller couldn't submit the documents before the foreclosure. It was in Houston. We tried to stop the foreclosure, but the situation was very difficult to deal with, and the problem was the seller. So in that particular case, he was behind on $10,000, and he didn't have a place to live. So I offer him the $10,000, not to him, right? Because I need to pay the mortgage, to catch up with the payments, and then give him $5,000 extra to find a place to live. From my perspective, in my underwriting, that means down payment. I'm putting $15,000 down payment. It was a $250,000 purchase. So going to the bank, 20% down payment will be $50,000. So I was stopping the foreclosure, putting in his pocket $5,000 extra, and I was saving $35,000 on a down payment. Also, that was recently, the interest rates were between 6 to 7%, and I was taking over the mortgage payment at 3.5%. So for me, I was buying the down payment, I was buying the property, and I was buying the mortgage in place.
Do you keep a lot of these properties, or do you turn around and resell them?
I don't like to sell properties, to be honest.
So you rent them out. So that's where you're saying the numbers have to work then, correct?
Yes and no. I'll give you another strategy that I love it. Is another creative strategy, and I call it the wrap transaction. I'm gonna use simple numbers. So you buy the property for $100,000. Let's say I'm gonna use simple numbers. I know that buy a property for 100 is not common in these days, right? But just for the sake of the
Yeah,
example.
right.
So we're buying the property for $100,000, right? So let's say that I'm taking over the mortgage payment, and the mortgage payment is $500, for example. And in the transaction, I needed to catch up with the payment. Let's say that it was $10,000, and I offered the seller to put $5,000 in extra in his pocket, right? So for me, I put down $15,000 as a down payment, right? And now I'm taking over that mortgage payment. So now I turn around. That's the transaction, what I call A to B. Now I turn around and I do a second transaction, B to C. Now I pitch or approach someone that is not bankable. And again, this is the perfect environment for that. Because how many people were qualifying for a loan, then suddenly the interest rate spike, and now the bank says, you know what, Mr. Bai, I'm sorry, but you was qualified last month, but now the interest rate increased. I can't approve this loan for you. So there's so many people like that out there. So now what I'll do is I turn around and I sell the same property that I purchased for 150, 100. I'm sorry. Now I'm selling that property for 150 at a higher interest rate, and now I keep the spread. And I ask a down payment for $30,000. So in other words, I put $15,000 down in the transaction A to B, but in the transaction B to C, I received $30,000 as a down payment. So in other words, I bought a property with $15,000 in my pocket upfront, and now I'm getting a passive income check every month on that second mortgage note. That, again, I'm using just example. I'm not using a calculator, but let's say that is $1,000 mortgage note on the transaction that is B2C. So I have the responsibility to pay the first mortgage, that is the transaction A to B, that is $500, but I'm getting a monthly check of $1,000 from the transaction B to C. So I keep the spread, that is $500,000. So in a summary, I bought a property with $15,000 upfront in my pocket, and then I'm getting a $500 spread passive income without the responsibility of being a landlord because I'm transferring the deed in the buyer's name. But I'm the lender, I'm the bank in this case. And if you think about it, isn't that the same thing, the same game that the banks play? It's the same game. They borrow and they lend.
I
They
said that's the
borrow.
most creative financing of them all.
Yeah,
All the ones you
yeah,
said.
yeah. The problem is, as I said at the beginning, the culture, the society, the school system, the financial system, the government taught us that the only way to buy houses or real estate or cars or an RV or a land or whatever is either cash or with a mortgage or going to the bank. But if you think about it, 200 years ago, it was only with a handshake. So then the banks changed the game. Of course, you know, they started to change the game 100, 150 years ago. So when we were born, you know, our parents taught us, the school system, everybody taught us that we have to go to the bank. But before the banks existed, creative finance, it always been there. It also always been in place. You know, before that it was with a handshake, and I was like, you know what, Kenneth, I don't have all the money, but you know, I'll give you my handshake and I'll pay you $500 every month, and that was it. That was enough.
Interesting. So when you're buying the A to B transaction, are you letting them know, or are there ever restrictions that you can't sell it? Or do you have to wait a certain amount of time? What?
No,
You
I
could just
don't.
either- Mhm.
I don't, to be honest. I do the transaction right away, or I try to do the transaction right away. Remember that in this case, I'm relying on getting a new buyer. But just a tip, the best, but not cities necessarily, but the best, cities that we can maybe trying to find a buyer that is not bank, not city, actually. I'm sorry. I wanted to say that because I have done a couple of transactions to Hispanic people. These people, they work in construction. They have money, but they don't have the credit to buy houses, right? So these people are great to sell the B2C transaction because they have money to make the down payment and they have money to make the monthly payment. But there's also another niche. What about business owners? Some of them, they don't have the credit because they are capped because their business have a credit line or credit card or whatever. It actually happened to me. Now I'm bankable, but I remember when I started my business itself wasn't bankable, so I needed to put my personal credit card in order to buy inventory and make business successful, right? So this is very common in business owners as well.
Renee has a question for you. Go ahead.
Sure.
Okay, when you're the A and B person and you're wanting to sell it to a B and C person, don't you put that in a clause somewhere in your paperwork when you're selling it to the B? Or I'll back up. When you're buying it from the seller, don't you have something put in the paperwork to where you can resell it? So that way he can't come back on you. I thought there
You
was
could.
kind of
Is there
You
a
could.
contract clause that you put in?
there was some kind of clause that long time ago I've heard this, and they said they always put a clause in it to where that way the original person,
I think it was the buyer
right
or assigned, right? Wasn't it? Or assigned?
So you could, but and it is always recommended to do this type of transactions with a transaction coordinator. But let's I'm going to answer the question in a different way. So let's say that I went to this city, I purchased the property, right, with the bank. I transferred the deed. Now I have to pay that mortgage payment, right? But now a month later, for some reason I got tired. Maybe I'm moving to another city. I have the right to sell my property. This is my property. The deed is in my name. This is the same concept in this type of transaction. So remember that the mortgage is one transaction and the deed is another one. So I'm transferring the deed from I'm the B, right? So I'm transferring the deed from the seller to myself, that I'm the B, but now I own that property. I have the right to sell that property to someone else that is the C transaction. Does that answer the question?
Okay, thank you.
Sure.
Yeah, so how, even though they're not bankable, like how are you validating they have the funds, to,
So I love that question because I remember when I was starting that was the first question that I asked. And it's very simple. We're the lender, so you don't have to be too strict like the bank is, right? You put your own criteria, right, to approve the loan. But in my case, and what I have heard, people that are doing this, I just ask for two things. The person needs to prove me that his monthly income is 3 times the mortgage payment or more, and the down payment has to be the minimum. And I don't like to say this because I always try to go between 15 to 20%, but most of the time you have to do the transaction and go lower to make the transaction happen, and maybe a 10% down. I don't like the idea. I always try to do 15 or 20% down. So answering your question, I asked the person to come over with with the $50,000 or the 30 or the $40,000, whatever the amount is. And then the other thing is that I asked for a letter of his employer or the person that he's working with that can let me know, what's his monthly income. So on top of that, I add the performance did addendum. So if the seller stopped making payment 60 days later, and it doesn't have to be 60, you can do 30, you can do 60, 90, 120, whatever you want. I personally do 60. I don't have to foreclose on him. I transfer the deed immediately in my name.
Yeah, see, that's a good thing because unfortunately we had a bad experience with a partner / real estate person we worked with. We sold them one of our houses and they had the deed, and unfortunately they had liens that were placed against our house. So when they stopped paying and we tried to kick them out, we had all kinds of liens against their house then that we had to negotiate. Well, actually Donna did all the work for that, and they actually they were remodeling the inside of the house, but they literally destroyed it by like $40,000-$50,000 because they never actually did anything once they took it all apart inside. So that was one horrible experience we had with that. So
and they wouldn't leave either. Even though they weren't paying. So we were paying their mortgage, the mortgage for them to live there, and they would vacate.
Yeah, so those things can be addressed with the performance deed or with the servicing company. So you can request that service as well. So if a lien comes through, that's the first red flag, to foreclose on the person or talk to the person or whatever you want to do, right?
Yeah.
So there's a way to address that. And yeah, definitely there's way to address that. And he
Yeah,
always
yeah, I like your approach there with that.
yeah, and it's always recommended 100%. I don't
Yeah.
do these transactions without a transaction coordinator.
Mm.
And it's cheap. Transaction and TC charge between $300 to $700 per transaction. The most expensive one that I have paid was $1,200, and it was because it was in Puerto Rico. But here in the US, 700, 600, so it's very cheap.
Wow.
That is good. All right, we have
Wh-
time for one more question. Anyone have a question for Alexis? All right, okay, no more questions. Any more final parting thoughts, Alexis? Then you can wrap it up.
Yeah, I mean, I will say that this is the perfect environment to do this type of transaction. And when I learned this, or when you learn this, you become addicted. Because imagine not going to the bank. Everybody knows, how does that feel? 30, 60, sometimes 90 days to close on that mortgage, on that transaction. Then the banks, start to back and forth. At the end, we have to play their game, not our game. And at the end, as a buyer, we don't have the best deal at the seller either, as you guys saw. The problem is that we are thought that was the way, and because that was the way, but I get whatever I get. If I need to pay the broker, the agent, or all the closing costs involved, that's part of the game. But there's not, there's other ways to do that. So my final thought is that start practicing this. This is a beautiful game. It's something that has been in place. Actually, there's articles, or actually the IRS has I think that is 13 pages of a full article in their page on how to do a subject to and a seller finance transaction in a proper way. What does that mean is that the government is supporting this. This is not new. It's been in place for years. So start practicing that. And the best way and the simple way to practice that is with people that are in pain, that basically you are fixing a problem that they're going through, and you're getting a benefit for that.
Were you going to put in the chat that one link for
Yeah.
whatever?
Let me see. I think that I
I'm
have it
also
here.
gonna put it in a chat, a bunch of links. So this is let me see, what did I put in here? So
I have the hot. I'm gonna drop off the hot Solomon, and then the IRS. I think that this IRS link. Let me see if this is one. This is the one that explain. Yep, how to. Yep. Let me drop it off. This is how to the taxes, or the capital gain taxes, work as well.
okay, that's cool.
Okay.
Yeah. This was super informative. Thank you
Thank
so
you very
much.
much.
Love it.
Before
You're
we
very
go, I
welcome.
just want to point to the chat. So Hook Up with Real Estate now has a YouTube channel. So if you subscribe, you can watch the replays. We also have a Facebook group, which you can get the latest news on. We have Ken and my LinkedIn, and as always, I do public speaking coaching, so my Facebook link is there. And also, very excited because I participated in a book called Real Women in Real Estate, Unleashing Her Power, Inspiring Stories and Strategies. And if you order right now before 7/7, I think the date will be later, but it's just 99 cents to get a Kindle edition. So the link is in the chat for that as well. And Alexis just put in the links for the IRS documents. So that's great too. So we have lots of valuable resources for you to take over. I'm gonna copy those. And so, Alexis, this was really terrific.
There's
That's
a
been
hand
great.
raised.
I have a question.
Oh wait,
Yeah.
Olu has a question. I'm
Sorry
sorry.
about that. Sorry that it's late. It's for Alexis. Have you tried this with a multi-family investments? Because you did say that you do an A to B and then B to C. Have you tried doing it with a multi-family? Because it seems it's mostly like single family you are looking at. I was
So
just
the
wondering.
answer to that is it's the same game. It's possible. I
Okay.
haven't done it, to be honest. I have 3 offers right now that I'm negotiating, and if I close them, well, one is a multifamily, and the other one are one resort, and the other one is a small boutique hotel. But you know, the 3 of them are commercial properties. I feel very optimistic that I'm going to do my first subject to and seller finance transaction on a commercial property because of the conversation that I'm having with the 3 of them. However, I know people that I have done it. Actually, I know a guy that he recently closed on a 255 unit
Wow.
seller finance transaction at a 50-year note. So it's possible. It's not common though, because most of these
Okay.
transactions, there's a broker involved, and dealing with brokers in this type of transaction is very difficult. It's not impossible, but it's very difficult because now you have to explain them. Most of the time they feel threatened. To be honest, I don't understand why. And actually, let me tell you something. The reason why I haven't closed the small hotel that I'm trying to take down is not because of the seller, it's because the broker is trying to turn down the deal. That I don't want to know why, because I told him your fees, actually the LOI says that I'm going to pay all the closing costs, and I offer him or submitted the proof of funds, but he's not buying the deal. He's not buying the idea to do a seller transaction, and the seller wanted. this is
Yeah, I can
this is
imagine.
but I'm waiting until the seller, because I had a conversation with the seller last week, and he said I'm gonna call him because I'm kind of interested to do this type of transaction. So the seller is gonna call the broker to convince to do the transaction, or we have to wait until the contract expired.
Okay. Thank you very much.
My pleasure.
Thank you.
Alexis, is
And
that the
thanks for all
Columbus
the
deal? How you doing?
Hey, Isabella. No, actually, this is another deal. I haven't talked to the Columbus deal, and actually, I'm the deal that Svelo is saying that we have a deal, 70 unit deal that we think that is a home run, but we're trying to do this in a seller transaction type of deal.
Okay. Sorry for interrupting.
No, you're
that's
good.
fine.
Oh,
So-
good.
You're in Ohio, right?
I am in Ohio. I am close to Toledo.
Okay, because Ken and I are actually driving that way in August, somewhere around the week of, let me look at my calendar, 20th, somewhere between 20th and 22nd. So, or 3rd, yeah, so maybe if it's okay, we can see if you're around and meet up.
Absolutely. Yeah. Send me a text and
And
we
we're
can.
doing a road trip out to visit our Indiana properties, and we figured we'd kind of make it business / pleasure. So
Love it.
yeah. So
All right, well, I don't want to keep everyone too late, but I really, really, really appreciate
thank
everything.
you. That was terrific.
Yeah, everything you prepared in
My
advance
pleasure.
and
We're doing
Going
after
to-
party right now. Come on. That's not
Okay,
all
the
again.
after party.
After
All right,
party.
so I will tell you what's going on next. The next meeting is on July 26th, 7:30 p.m. Eastern time. And Silvius will be on talking about his capital raising. So mark your calendars, July 26th, 7:30. So,
Actually, I'm gonna be in vacation in Boca.
You kind of broke up there. You're going where?
Oh,
I'm
sure.
going to be in Bulgaria.
Oh,
Ah,
Bulgaria. Okay. Well, it's just a
Yep.
Zoom away.
Visiting my
I don't
family.
know what time of day that would be though. I'll have to get you up at 3 o'clock in the morning to join.
I'll look it up. I'll look into it. So you never know.
You never
Well,
know.
thank you very much, everybody. It's been
You're
very
welcome,
informative.
thank you. Thank
You're
you.
Thank you so
welcome.
much for joining.
Thank you.
Okay, have
All
a
right.
great night and have a happy 4th.
Yes,
you, you
thank you. You
too.
too.
I'm
Happy
gonna
4th, everybody.
All right, I'm
Okay.
gonna end the call here and get my recording on my computer. I'll send it over to you, Alexis, as well. All right. Good to see everyone. Thanks for joining. Have a good night.
Perfect. Thank you so much
Holiday.
Good
for
night.
having
Thank
me. Bye bye.
Great job, Alexis.
Thank you. Bye bye.
Yeah.